All right, today we're going to dive deep into Tetra Tech's fourth quarter earnings call. And let me tell you, this wasn't just another earnings beat. This was a massive event that fundamentally reset the story for this stock. And we're going to break down exactly what went down and why it's so important for the year ahead.
So let's just start with the market's jaw-dropping reaction. The stock absolutely rocketed up, closing more than 15% higher in a single day and on huge volume. A move that big tells you one thing and one thing only. Wall Street was totally blindsided.
And what was the catalyst that lit the fuse? Right here. The company dropped an adjusted earnings per share number that beat the street's expectations by a full 10%. In today's market, a double-digit beat like that is a massive statement. It makes everyone sit up and pay attention.
Okay, so here's our game plan for breaking this all down. We'll kick things off with that headline beat, then we'll go inside the numbers to see what was really driving this record quarter. After that, we'll look at management's big strategic pivot into water. Then we'll dissect their guidance and the key questions from the call. And finally, we'll wrap it all up with our take on what happens next.
So first up, let's talk about that headline beat. And honestly, calling it a blowout might be an understatement. This quarter completely changed the narrative around the company.
I mean, the numbers really do speak for themselves. You've got adjusted earnings per share at 44 cents, a solid 10% over what analysts were expecting. But it wasn't just an earnings story. Look at the revenue, $1.16 billion. That crushed the consensus by nearly 9%. Getting that kind of top and bottom line beat together, that's exactly what investors were dreaming of.
But, a big headline number is one thing. The quality of those earnings is what really matters. So what was going on under the hood? Let's take a look at the engine that powered this whole thing. Now this right here, this is where it gets really interesting. Yeah, net revenue grew a super strong 10% year over year. But check this out. Operating income grew by 23%. When your profits are growing more than twice as fast as your sales, that's just a beautiful sign of powerful margin expansion.
And we're not just talking about a good quarter for margins. We're talking historic. The CEO himself, Dan Batrack, pointed out on the call that this was the best operating margin the company has seen in over 3 decades. This wasn't some lucky accident. This is the direct result of their strategy to focus on higher value, more profitable work.
And if you break it down, you can see the strength was pretty much everywhere. But the real star of the show was the Government Services Group, or GSG. It grew by a massive 17% with record margins to boot. And their commercial and international business also put up a solid 7% growth. Both engines were just firing on all cylinders.
And this all brings us to the bigger picture. These incredible numbers didn't just fall out of the sky. They are the direct payoff of a major strategic pivot the company has been making towards some really attractive, resilient markets.
What Tetra Tech is doing is so smart. They're positioning themselves right in the middle of these huge, multi-decade megatrends. We're talking high-end water consulting, upgrading our entire electrical grid, beefing up U.S. defense and protecting our coastlines, and maybe most excitingly, servicing the explosive demand from things like data centers.
And if you want to really wrap your head around that data center opportunity, just listen to this stat the company's president dropped on the call. A single large data center can slurp up 5 million gallons of water per day. Think about that. The boom in AI is creating this gigantic secondary boom for water infrastructure, and Tetra Tech is perfectly positioned to catch that wave.
And in case you needed any more proof that this strategy is working, well, here you go. Their backlog for high-voltage transmission projects is up 120% from last year. That's not a typo. This is cold, hard evidence that they are winning big from the global energy transition.
Okay, so the quarter was incredible. But what about the future? After a report this strong, all eyes were on management's guidance for the next fiscal year, and of course, the big questions that came up from analysts on the call.
So, management came out with a really confident forecast. They're guiding for net revenue to be somewhere between $4.05 and $4.25 billion. And they expect earnings per share to land between $1.40 and $1.55. Basically, they're promising another year of really solid growth on top of this monster quarter.
But that awesome guidance led to a bit of a head-scratcher. The analysts on the call were sharp, and they immediately pointed out that the company's total backlog was flat compared to last year. So that leads to the million-dollar question: how can you guide for strong growth when your backlog isn't growing?
And this really frames the whole bull versus bear debate perfectly. The bears are hung up on that flat backlog number, But management's answer is the whole bull case. They basically said, look, you're looking at the wrong number. The nature of our work is changing. We're getting these huge, multi-year contracts, especially in defense, over $1.2 billion in new wins. So while the short-term backlog might look flat, our total contract capacity, the total amount of work we're allowed to do, has exploded. They're actually booking work faster than ever, which is a sign of incredible strength.
Okay, so we've looked at the quarter, we've looked at the strategy, and we've looked at the debate. Now it's time to put it all together. This is our final take on what to expect from Tetra Tech moving forward.
We're going to keep it simple. 3 steps. First, what we expect for Q1. Second, where we think the stock price goes from here. And third, our official rating on the stock. For the first quarter, we're not expecting any huge surprises. We think they'll land right inside their guided range. The real story now is the stock price. After that massive 15% jump, it's probably going to need to catch its breath and consolidate around that $37 level for a bit. But, and this is the key, if they keep executing like this and proving out that massive contract capacity, we see a clear path for the stock to grind its way towards the mid-40s over the next year.
So, with all of that said, our official rating on Tetra Tech is outperform.
And what that means is simple. We expect T-Tech stock to deliver better returns than the broader industrial sector over the next 12 months. It all comes down to their proven ability to keep expanding margins and their brilliant strategic focus on those absolutely essential water and energy transition markets. And of course, as always, a final reminder, this analysis is for informational purposes only, and it is not financial advice.